GM and welcome back to the channel. In this video, we're talking about DeFi. Due to the fact today did an episode on Blockmates, Round Trippers, which is a weekly episode of podcast we do behind the scenes, which is a paid subscription service. There'll be a link down below if you want to check it out. But what we talked about and what the questions that were coming in were, where do you see DeFi heading here? Because DeFi seems to be very much in the rear view window. A lot of people are disinterested in DeFi. And so just some thoughts on DeFi in this video more broadly. And we talked about this earlier on that podcast episode, but we can do an episode here and talk about passive income and some of the actual protocols you can invest in. So say you do make substantial money in the market, maybe you want to secure yourself a bit of a salary from DeFi, which is possible. There are few and far between protocols that actually offer this and consistently offer this, because you can find APR in DeFi, but typically they're in kind of pools, maybe LP pools, where there could be some income to be had one week, but the next week it's all disappeared. So let's not digress too much. There's three protocols to look at here. One is in the infancy, one is very much lindy, and then one is fairly lindy. It's been through a bear market. And so let's just talk about those. So we'll jump straight on in. Bitcoin 64.6K here, showing a bit of recovery. Dropped down to this yellow line, which was the shallow fib, and it has bounced from there. ETH looking very weak here, obviously with mass selling from Grayscale, so people leaving Grayscale's trust. So total stablecoins in the crypto economy have gone from around 127 billion last year to dips down to 123 around November 2023, and it's been climbing up nicely. We have a plateau here. This is where the market topped around the end of March. Obviously growth in the market, plateau, but it seems to be ticking up again. We've gone from around 160 end of June to now 164. Positive sum environment 0.69%, and the trickle-on effect here will be TVL for DeFi protocols starts to tick up here with stablecoins increasing. And once the kind of shenanigans around Grayscale and the ETH ETF, once that clears, that gray cloud, there's going to be inflows into the ETH ETF. ETH should go up in price as a result, and we will see a lot of TVL growth. And this will be one of the key factors that starts to move DeFi more broadly. So post Ethereum ETF, I think we're going to have a big DeFi season at some point. It may not even be this cycle if we think about it logically, but at some point, the guys in the suits who are coming to this market, they're going to be doing their PE ratios. They're going to be looking for the real yield plays, because in TradFi, there's not really much dividend investing to be done. They offer you just the crumbs that are kind of left over from the C-suite who take all the money. But in crypto, you can own these businesses, own their tokens, and get a share or all of revenues. And of course, these companies have no staff costs. So they're deployed via smart contracts, they produce revenue, they get used by people in the crypto economy, and you can get a share of that. And if we just think about crypto growing over time, 10, 20-year time horizon, whatever it may be, the amount of volume currently done, 5.7 billion, this is going to be small potatoes in terms of where we end up. If you can try and think longer term, and some of these DeFi protocols are going to be major beneficiaries to that. So if you can kind of have like a few portfolio kind of setups in your head. So we chase the meme coins, we chase the capital gains plays. We want to obviously improve our situations, but you need to have a longer term time horizon for other things as well. And DeFi is one of those things. I want to try and corner a good amount of, a good sized portfolio in DeFi for the long run, and not even think about that in terms of capital gains and cashing out. Just think about it as how much of a salary can you pull from this market on a weekly basis. Come bull market, bear market, it doesn't matter. Bear market, you go through austerity, the weekly, bi-weekly paychecks, whatever they may be, they're going to go down in value. But in the bull market, and I spoke to Noah the other day, he said he expects over this bull run, you're going to see the yields coming from these kind of plays go up maybe 5 or 10x, which is rather incredible to think about. So you're going to go through the booms and busts in your yield portfolio as well. And you should probably just be like stacking those for the long run, harvesting the dollars and waiting to deploy into bear markets. So a bit of a long-winded intro there, but first protocol is Tapioca. So Tapioca is going to be the on-the-chain dollar that you're going to see across, well, on-the-chain means all the chains. So of course, once this thing gets going, they've had a bit of a false start, but things are shaping up as per the video I watched from 2 days ago now. Powered by Layer 0. USD0 is their stablecoin. That was on the 23rd of July. Give this a watch. This tap talk was really, really good. So they're gearing up for their kind of real launch. They had the soft launch, didn't go 100% well, but it's a meticulous team, guys who are very, very passionate about what they're building. And they have a borrow lend market, as you can see here. And you need to deposit some of these good pristine collaterals, wrapped ETH, staked ETH, Rocket Pool ETH, to mint the stablecoin to be used across all of the chains. Now they're even talking about Solana-based interaction as well. So having Tapioca tap into Solana as well as all your favorite L2s. So just imagine you deposit your Ethereum on mainnet, you take out a stablecoin loan against that, USD0, and then it's deployed and can be used anywhere. So you can actually take the loan out on a different chain. Apart from the minting here, people can also lend USD0 by depositing selective productive assets. So they got a SGLP pool here. Then a key feature is going to be the locking of your assets within here. So locking up USD0 or locking up some of these other collateral assets. All these things are going to mean that this protocol produces a lot of revenue. And TW tap, so a time-weighted tap holders, the people who lock Tapioca, as you can see up here, $3.25 is the current price. They're going to receive 100% of the fees generated by the protocols. So the protocol is getting deployed. There's going to be a ton of fees generated by this because the demand for a stable coin that can be used across all chains will have huge demands. There's going to be big fees being taken. A lot of the instruments on here are yield bearing, and they'll take a clip from these. If you want to exchange Tapioca currently, if you want to buy or sell it, there's a 1% fee on the pool. They own the full LP pool as well. It's protocol owned liquidity. And from the talk, they were suggesting that they've already generated in just over a month, around 700K. I think half stays in the LP or something. They've generated around 350K just from token swaps during this choppy price action, which has been a very nice price action overall. And that would go to the lockers of the TAP token. So in terms of a real yield, real revenue income kind of play, if you're into your passive income, as we call it in crypto, this one's going to print. The calculation is currently around 40% APR without the protocol being live. That is just from the swap fees generated on this, which shows you when all the revenue goes back to token stakers, how high it could be. Most of the DeFi protocols squirrel away all the profits themselves, don't share it with their communities. Tapioca is going to be very, very different here. Market cap is just 24 mil. And if you just do this, Tapioca's market cap versus that of Aave, which is going to be a competitor. Of course, Aave is very, very lindy. One of the most renowned DeFi protocols out there. So I'm not saying it's going to go and eat its lunch straight away. But over time, this is kind of sky's the limit territory. You want to go and have a good crack at these kind of guys. Now, if it does reaches Aave's market cap, it would price each tap token at $190. Now, this is obviously rather far away from there, but I think somewhere in the region of like $50, this market cycle is not out of the question for Tapioca. And the reason I say that is this was a no VC raise. They did it via angels, people in DeFi, the Blockmates guys, Noah, notable investors within the DeFi space that you probably have heard of got involved in this to help raise the funds to actually create this. Now, if this was a VC raise where you wouldn't have the opportunity to buy under, say, a couple $100 mil market cap, that's the kind of price point it would start at. But it's actually at 24 mil. So I'm actually thinking of adding even more. I've got a pretty big position as is, but I'm thinking I'm going to add a bit more, to be honest with you, as this will be yielding ETH, wrapped ETH, and paying out each and every Friday to the TW Tap lockers. So I think they're going to rename TW Tap to something else, maybe just Lock Tap, I'm not sure, but there's going to be real yield in the form of ETH paid out each and every Friday to those who stake said tokens. And if the yields are comparable to the current figures they're talking about, this thing's going to print like freaking crazy. So this is one in the pipeline, cooking nicely in the background. Let's move on to the next one. CurveDAO, CRV. So this is Again, a very Lindy protocol. It's been around for a heck of a long time, since DeFi first started. Market cap's $300 million. It processes a shit ton of DeFi volume as people swapping between different types of stablecoins, primarily on ETH mainnet. They've also got Curve's Llama Lend, so a borrow lend facility. They have their own stablecoin, CRV USD. They've got a lot of things going for it, but one thing they don't have going for it is good price action, as you can see from here. But if you remember back to June, where Mitch, the CEO, was liquidated, taking price from like 40 cents all the way down to 25 or so. We're pretty much back there again, back to 25 cents as, shock horror, Michael Eric Egorov, Curve founder, has been liquidated for 2.5 mil earlier today. So pretty funny story here. If you actually read into this, he's saying, look, the liquidator actually got Curve and Yu was previously hacked, so they actually haven't really got much unless this is repaid. But essentially he was liquidated on that position no matter what, if those tokens are actually valuable or not. But pretty funny that he's causing cascades of his own protocol. Whether or not that is morally right or not, I'm not quite sure. But this is one I do have my eyes on because it is a cornerstone of DeFi, irrelevant of what the CEO is doing. And it's also deployed immutably. So this means that it can't be taken down. So say someone puts a gun to Michael's head and say, take Curve Finance down. He could take away a front end maybe, but the protocol will live on and it will generate fees. And once these things have Lindy in the market, people will get used to using them. They're deeply integrated. They're just money printers. So rather than have to stake Curve, because if you want to get the max benefit out of Curve, you have to stake CRV for 4 years to get the total max booster. Well, there are other options. So this is the one I've been eyeing up. And if I am to make an additional passive income play here, I think it might be this one. If CRV price goes sub 20 cents, I think this is just a solid, just ape some in. And yeah, probably take a position here in Y Curve. So this is from Yearn Finance. Yearn Finance have a liquid locker. So essentially, they do all the locking. You get this liquid lock token, YCRV, which is tradable as a pool between CRV, YCRV, I believe. Anyway, you can swap between, say, ETH to YCurve on a Uniswap, and then just come here and deploy it. So if you see this bit, it says earn CRV USD. So the fees are currently played out in Curve USD. So this would be paying you out in dollars. So you would come here with YCRV. So say you buy 100,000 tokens, whatever it is. It's going to be paying you out 30% in dollars itself. So real yields. You can come and claim your rewards. And it also auto compounds these in a vault as well for you, which is pretty cool. So if you don't claim them, it's going to auto compound the dollars and it's going to be an even higher APY. If you leave it for the full 4 weeks, so it kind of loads up in terms of the staking benefit. It starts off, you can see here, 12.5% and goes up to 31%. These numbers do fluctuate depending on how much volume is going through Curve at any given time. But this hasn't really been below 20% at all since I've been tracking this, and it's been as high as 95%, I think it was a couple weeks back. So this is a money printer again, but you don't have to actually do the full 4-year lock with Curve. You could come and use Yearn here and get paid out a salary in CRV USD, which is a stable coin. You can convert CRV USD into USDT, off-ramp it each and every week, I believe, or I'm not sure how frequently this will pay out. It says, say, rewards this week. So I guess you get a weekly payout here. So around 30% is possible with one of the biggest, most Lindy protocols in DeFi. So again, say you make a shit ton of money on some random ass meme coin. If you're looking to secure the bag and take out a nice salary from DeFi, Curve could be one of those plays for you. Then last but not least, we're going to talk about Aura Finance here. So Aura trading at 67 cents. Chart doesn't look great, but you're not investing in this for the chart. In fact, you're looking to buy this as cheap as possible because it's going to pay you out that passive income. And whether you buy at $3 just means you got less tokens, so you're going to get less revenue. If you can buy it cheaper, you get more tokens for your money, more bang for your buck. And the APR is like 40% on this thing. Market cap's 33 mil. I do think this, again, will go up with TradFi moving in on this space. People are going to eventually become attuned to what is possible in DeFi here. The suits are going to start buying these tokens. When that happens, I have no idea. But if you look at this, so Balancer, one of the big exchanges on Ethereum mainnet, VE-BAL is the staked version. And like you have Convex that owns a load of Curve. Aura here owns 70% of VE-BAL. So it can direct the emissions of BAL. And this means a lot of bribes come to vote locked Aura holders. So another DeFi inspiration here, we have Messi as well as now Agent Chud. So he made it last cycle and he says, look, if you've made it, I highly recommend securing yourself a salary via Convex or Aura. Now I prefer the Y curve method that I just showed you, but stands the same. He's obviously got a shit ton of money and a huge bag here. That's 1 million vote locked Aura. And he's saying for the past 2 years, every 2 weeks, he's pulled out just by clicking claim between 15 and 40K on that bag. So that's every 2 weeks. So on a monthly salary basis, his investment, which he made from shitcoining, pays him out 30 to 80K a month. Just freaking insane. And I think we get clouded with what is possible in crypto. Yeah, you can potentially turn a few K into a few 100K, but if you can secure the freaking bag and potentially pull out, obviously not a number as high as this guy, but say you can get 10% of that and you're pulling out between 1.5 and 4K a month, or 2 weeks, which will be 3K and 8K a month on 10% of this, you can probably look to quit actually working, secure the bag in DeFi, and then go more full-time crypto or do whatever the frick you want, even have it as an income strategy on top of your salary, whatever you want to do. But you can see there's these ways to secure the bag, as he says it. If you've made it, secure the bag and get cash flow, because cash flow is really important in crypto. We go through so many booms and busts on pretty much a weekly to bi-weekly to monthly basis where it's all over, then we're so back. If you're not really good at taking profits, it's pretty hard to, plan things out. But if you've got some form of steady cash flow here, and I really do like VL Aura because I have a position in this, and I did speak to Messi briefly about it via some messages on Twitter, and he was like, look, just secure a salary, and that's what I did. And you can see the calculations here. So these are the incentives currently in the last voting round. So every 2 weeks, new voting round comes. The total rewards around 350K in bribes here. And the calculation is there. So if you bought 10,000 Aura, which will cost you around $6,700, you'd be able to pull out $104 from that on a bi-weekly basis if this is the average. Where he's saying, look, on average, 15K to 40K. So on we'll just do 100,000 VL Aura. So say you make 70 grand, say $70,000, you buy 100,000 VL Aura and it prints you 1.5K at a minimum. This is saying it'd be about 1.4K, I think. But, a few pennies different. Essentially, you can do the calculations to see if I invest X, what am I likely to pull out every couple of weeks from this protocol. Now, with hidden hand here as well, what you can do once you delegate your VL Aura to hidden hands, there is a button once you've connected your wallet that allows you to select them to run their algorithm, which will vote for you. They distribute the votes across all the pools, and you get, I think, a slightly better rate than this, and it's paid in wrapped Ethereum. So that is what I do, and my numbers seemingly are slightly better than what is quoted here. So I think on the basis of 100,000 Aura, somewhere in the region of $1,300 to $1,400 on that kind of basis is what I got in my last round. So you can pull out these salaries from DeFi, and over time, if this goes up in value a lot, you obviously have a collateral asset. So Aura itself, you lock it, but it's for a 16-week lock, which is 4 months. So you can also run the calculation of, do I want to hold this forever, like Messi's done, and just pull out the income, pull out the salary each and every week, regardless of boom, bust, bear bull. Take that approach, or you do have the option, like with Y curve here, where you could liquidate that at any moment. You can unstake this instantly, Aura, obviously your time comes to an end, 16 weeks down the line, you have the option to relock or not. Maybe you'll get to a scenario where it's like Aura's trading at $4 or $5, you bought in under $1. Maybe you'll want to just sell it. So you have that optionality open as well. So there's a lot of considerations here, but in terms of protocols that are currently paying regularly in DeFi right now, Aura, Curve are two of the best. I think Tapioca is going to be screaming up from behind. And honestly, this is a capital gains play as well if you want it. I think they're going to really start printing. So just a bit of food for thought here, a bit of a DeFi update as well. So if you like this kind of chat, we do this on a weekly basis. Check out the Blockmates meal deal. I'll leave a link for it down below. There's a lot more than just that podcast. We got loads of research reports and a full team over there as well. So check the link out down below, and I'll see you in the next one, guys. Peace.